Hello, everybody. Luke Gromen, FFTT. Hope you are well and having a great week. We're off to a great start here in lovely Cleveland. Another nice week of weather here up in the 60s, not a cloud in the sky, which is how we like it on March 11th here. It's unusual, so we will take it. So I'm going to jump right in here. The first question from CR regarding gotta get the dollar down. Is that why the Bank of Japan is ending yield curve control? Their rates go up, stronger yen, weaker dollar. Corollary, how can they afford that without selling treasuries, which then drives treasury rates up and then the dollar up? Great questions. In my opinion, I think it may be part of a coordinated global effort to manage to a weaker dollar, because a weaker dollar is in the interest of everyone in the world, including the United States. Everybody desperately needs it. Great question about how can you do it without selling treasuries. I don't think you can do it without selling treasuries. With that said, it would suggest, in my opinion, that you need a price insensitive buyer on the other side. So Fed QE, or alternatively, if you exempted treasuries from the bank SLR, as is now being discussed again, or asked for at least from ISDA last week, now all of a sudden you've got a huge buyer, infinite buyer with a zero cost of capital in the banks. And that should be effectively QE. They should be a very price insensitive buyer. So is that all related? I don't know, but the pieces fit together. So let's watch and see how it plays out. From CP, thoughts on impact to banking system as BTFP rolls off and reverse repo is depleted. Reverse repo, I think, will continue to be drawn down, supplying liquidity to the system. After that, you've got the TGA, Treasury General Account, that can be run down. My guess is that probably gets you pretty close to the election in terms of deficits that need to be financed relative to the pool of capital there to finance them. When you total up what's left in RRP and the TGA. And then I think that's where you can really get to the weaker dollar side of things. If you weaken the dollar on a linear basis through the course of this year, it should have a lagged impact that should help liquidity once those two pools of capital run out, if you will, or get down to sort of tag ends. Failing that, if they don't do that, if the dollar gets stronger, I think it would probably be BTFP going away, and then RRP going away is probably risk off, dollar up. Risk off, dollar up gets us right back to that nasty third quarter 23 investing regime of dollar up, gold up a little, and everything else down. From BT, why would anyone buy gold, Bitcoin now rather than wait for a recession, which appears to be imminent? I disagree. A recession appears imminent. I don't think it is. I think in fiscal dominance where we are, I think nominal GDP will continue to be good, even if it's heavily government deficit driven. For sake of argument, let's say that a recession does happen. In theory, I think you could get a brief sell-off in gold and Bitcoin into that, but I would buy that with both hands because I don't think it would last. Either dip would last for very long at all. And I think markets are understanding increasingly, in my opinion, that recession means dollar up means treasury dysfunction in very short order. And policymakers have shown 5 times since fall of 2019 they will not abide treasury dysfunction for very long at all. So with that lens, to me, trying to time and wait to buy gold and Bitcoin ahead of a recession, to me, is probably at risk of being too cute. I think most would not be able to execute that very well. So I continue to add to gold and Bitcoin on sort of any kind of day-to-day weakness. Small additions. They're good-sized positions already, but on weakness we add to it. From M, is there anyone in the U.S. government that sees the rest of the world might rug pull the world financial system on critical materials, asking only gold for payment at X amount of dollars, far higher than the current spot price of gold? If so, who would do this? And is this not an unspoken act of war? I think the U.S. has known for a number of years, particularly DOD, about the tenuous supply situation in certain critical raw materials and have been taking steps to hedge that, I suspect. I do think a move like that by a foreign power would be considered an act of war and cause for war. And as such, I don't think it's in anybody's interest to do that. Why would you do that and make yourself the overt bad guy when you can sit back and let compounding interest do what it's going to do what it is doing to the U.S. budget, and then Congress Biden and Trump, Congress Biden or Trump, are the bad guys. So that's, if I was playing the other side's hand, if you want to red team it, that's how I would red team it. That's how I would play. Just sit back and don't take the bait and let compounding interest do what it's going to do. With that said, take that with a grain of salt, as I thought that's what Putin would do in 2022, and I was dead wrong. So he invaded Ukraine. I didn't think he would because for some of those same reasons. So take it with a grain of salt. From LRG, is the gold price being moved by the physical market, not the paper market, since U.S. ETFs continue to decline while the gold price rises? If the physical market is now the main driver of the gold price, does this mean that the East now has pricing control over gold? In short, yes, in my opinion. Jan Neuenhuis wrote a great piece back in August of last year showing a breakdown across a number of different correlations and flows suggesting that the West had lost control of the gold price. That's publicly available. You can find that online on Gainesville Coin's website. I think the key for why this is happening is that gold is re-becoming an oil currency, something we've been talking about with clients for a number of weeks now, via the net settlement of BRICS trade imbalances. Really, it's been for a number of months with clients, but it's for the net settlement of BRICS trade imbalances. So BRICS trade amongst each other, country to country, in local currency. They settle in goods, and anything left over gets settled in gold at the central bank level at a floating price in all currency. A lot of the imbalance is driven by energy and commodities, and so ultimately what you have is gold being remade a energy currency, a oil settlement currency, commodity settlement currency amongst the BRICS. Now, where it gets interesting is at this point, BRICS oil demand is pretty much inexorable. A lot of oil demand today, tomorrow, a lot of oil demand, the next day, a lot of oil demand, the day after that, a lot of oil demand. China's the biggest oil importer in the world, and that's before you get to India, whose demand is rising rapidly, so on and so forth. So their demand for oil is inexorable. The supplies of gold, physical, in the West are not inexorable. So, in my opinion, we're in the early days of seeing price be the release valve, and I think it will continue over time as gold is, by all appearances, has been remade an oil currency by the BRICS. SD, silver has really lagged gold during the recent gold rally. Historically, many have treated gold and silver prices as tethered. I wonder what your thoughts are on silver, whether it is indeed fundamentally tethered, and if buying silver makes sense as an undervalued mini gold. In my opinion, I think gold will continue to outperform silver, as well as outperforming all commodities, oil, the Goldman Commodity Index, all of them. Gold being remade an energy currency means that gold is effectively being used as a settlement asset. Gold is not used for anything, as we're all frequently reminded. But during these points in the long cycle, that's a good thing, because it means you can inflate gold's price as much as you want, and you're not hurting the real economy. If you settled with, let's say, oil, and you stored oil and you settled in it and the offset debt with it, and the price of oil went to $400 a barrel to serve the role as a settlement asset. If oil is at $400 a barrel, the global economy is collapsing. Billions of people are starving to death. That's not good. Similarly, if you use, say, corn to settle trade, corn prices go from, I don't even know where they are right now, $5-6. They go to $25. Half of the world starves in the next 3 months. Not nice. Same thought here with silver. Central banks have gold on their balance sheet. They don't have silver on their balance sheet. Silver, yes, there is a monetary aspect to it, and I do like silver. I own a little silver. I think the fundamental outlook for silver continues to be good as we transition towards more electrification of societies around the world. With that said, if silver was serving as a neutral reserve asset, its price would need to go much, much higher, and suddenly everywhere silver is would start to get very uneconomic. iPhones, solar panels, other electrical applications, etc. And that's why I think ultimately silver is different than gold. I think gold will continue to rise relative to silver, relative to all commodities, as it re-becomes an oil currency. Next question from BD. Do you think the wall between Treasury, the Treasury and the Fed is pretty much gone, and because of that they have more creativity in dealing with the fiscal situation now? Yes, I do. I do think the whatever thin veneer of independence existed, I think that is gone, and it will continue to be gone until the fiscal situation has de-escalated, and probably till the geopolitical situation has de-escalated as well. From SL, how do possible, hope not probable, events like World War III, U.S. Civil War, no 2024 U.S. election, and or global cyber attack impact your view on global macro and investment positions or allocation? In my opinion, most, if not all of these things are basically uninvestable. They are, in my view, more of a personal lifestyle decision or choice. There's a great book, 1 Second After, by William Forstchen. It's a really good read, sobering read, but good read in terms of thinking about this, in my view. The punchline is that without modern amenities, most people don't survive a year. And when I mean most, more than 50%, depending on where you are. And you're in the book, up in the upper Midwest where I am, the rates were about half. In Florida, they were like 10%. So that's why I think it's much more personal. It's a great example of why it's a personal lifestyle choice. Hedging these risks also, in my view, isn't really a financial issue. So it's where you live. Fitness, it's a huge issue for fitness. How is one's fitness? In other words, can you go 6 months with no prescription meds and live? If you can't, I wouldn't worry about your money for any of those cases. You're not going to make it anyway, to be blunt, as harsh as that is. So it's get the fitness. And then it is thinking about things like Forstchen highlights in his book. What is the carrying capacity of the land naturally where you live relative to that population? Over the last 40, 50 years, a quorum of Americans have moved from places with very high carrying capacities, relatively speaking, to deserts, semi-deserts, and swamps. And that's fine as long as everything is fine. And if it's not fine, then that is a decision that would have to be factored into that as you think about macro and your own personal life choices. So from a macro perspective, I don't think a lot about it. I think it's uninvestable from that standpoint, but I am an Eagle Scout, so I always advise to be prepared. And final question from AH, any advice for a millennial trying to navigate the decision of liquidating inflation-hedged assets recommended by FFTT, gold miners, Bitcoin, etc., to purchase a home? I think it depends on your reason for it. The most important decision in life I have found has been who you choose to be your partner in life, whatever that looks like for you. Super, super important. Then I think the next thing after that is if you have children with your partner, educating them well and then being able to feed them high quality food are sort of right next on the list in terms of importance. And so that's my personal hierarchy, and given that personal hierarchy, in my view, it is never a bad idea to sell assets such as we talked about to buy a modest home with a great partner in a great area and neighborhood with great schools and access to high quality food to feed children and educate your children. In my opinion, that's the whole point of life. Like if like, why are we doing this otherwise? Now, if you're selling these assets to, buy a giant mansion and a Lambo, I would say don't, to be blunt. But I think so. It really comes down again to I think a personal decision and what the goals are. But for these major life milestones, I don't think it's ever a bad idea to make an investment in yourself, in your partner, in your children. So with that, I'm going to finish up for today. Thank you for joining me as always. I always really enjoy these conversations and updates, so thanks for submitting your questions. If you like these updates, check us out, FFTT-LLC.com, for more information about our tree rings product. 10 most interesting things, brief synopsis on each about what grabbed our attention about it and how it either confirmed or changed a way or refuted a way we were thinking about something in the world prior. So thank you very much for joining me. Everybody have a great rest of your week. Look forward to chatting soon. Take care, everyone.